Welcome back. You're watching On the Record with me, Shireen Bhan, and I'm in conversation with Morgan Stanley's Ridham Desai on their blue paper on why they believe this is going to be India's decade. You're also very bullish on the consumption story, Ridham, and you believe that we are going to see a significant, in fact, a seminal shift as far as discretionary spending is concerned. Build that case out for me a little bit. What could be the triggers that move the per capita as well as bring about this major shift that you are talking about as far as discretionary spends are concerned?
So, Shireen, that I think is the most important part of this story. The pyramid in India, the income pyramid, is set to invert. So we have a lot of people sitting at the bottom of the pyramid who are extremely poor, and they're going to move up the pyramid. And at the top of the pyramid, we're going to get some, major change. So currently, for example, the households in India that earn in excess of 35,000 US dollars a year is about 5 million. Based on our forecast of where we see GDP going and where we see the population going, this number is likely to go to 25 million by the time we get to early 2030. So that's a five-fold increase in the number of people who can buy Louis Vuitton purses. I mean, you look at that. Louis Vuitton's global brand ambassador is now Deepika Padukone. And I think they're sensing this. They're sensing that their big market is going to be India. This is what happened to China, 15 or 17 years ago. China was the biggest consumer of luxury goods. That's at the top end of the market. At the bottom end, as people rise out of that very low income levels, they suddenly find room to spend on everything that is not staple, which is, forget roti, kapda, makan. These are the three staple things. Even painting a home in India is discretionary. Sending your kids to school is discretionary. Buying a internet connection is discretionary. So a lot of that money will get spared up to do this. And this is basically the natural transition that's happening as we move from the $2,000 per capita to $5,000. And it's embedded in our GDP forecast. It's being driven by the fact that India is becoming the office to the world, is becoming the factory to the world, and is also being driven by the fact that energy consumption is set to rise. So all the factors that I mentioned earlier are driving this big consumption story. I think discretionary consumption will surprise on the upside in the coming 10 years. And a lot of subsectors will surprise us quite meaningfully because we've not seen that happen before. Things like travel, things like education, things, home effects. These are all likely to see major increases in spends. Even buying of residential homes, because, we've been in a 10-year bear market as far as home purchases is concerned. That's also breaking out now. So lots of things changing on the ground in India.
From a market perspective, from a thematic and sectoral perspective, what will you be watching out for?
So Shireen, first up has to be financials. Okay, credit to GDP is 57%. Corporate credit to GDP is 46%. Even if you adjust it for India's low per capita income, India is under-levered. It just doesn't have enough leverage on the balance sheet. And that's, I think, set to change. Oaken will allow greater credit dissemination. And, one of the headline views that we have in this report is that credit to GDP will go from 57 to 100. That will drive a 17% compounding of loan growth. So just imagine what's going to happen to bank earnings in the next 10 years. Yes, Oaken is a disruptive technology, but it's also going to help the banks lend, in a better way. And then you top this up with, IBC. I think the chances are that the next NPL cycle will be less punitive than the previous one. Because IBC will allow, banks to recover at a much better rate. And IBC has now settled down. A lot of that law has gone through, a lot of testing. So banks or financial services is, top of the pack. Consumer discretionary, I've already mentioned that. I think that's going to surprise on the upside. Make your choice. There are lots of discretionary, companies that will do very well. I think you should watch out for technology. It is going through a rough patch right now because of, the potential slowdown in the US. But I think digitalization that you mentioned is not just an India theme, it's a global theme. Companies are going to continue to spend to digitalize, and nobody, in the world can deliver those solutions at the rate at which India does, both scale as well as price. and Indian companies will be at the forefront of delivering those solutions. So I think when we come out of this rough patch, which I think we may have already in terms of share prices, we may not have come out in terms of profits and revenues. I think the IT services companies could do well. And then industrials. You mentioned defense, that's part of industrials. We're going to see a major indigenization of defense spending. So Indian defense companies should do well. Industrials overall, because I'm quite bullish on capex, I think should do well. So, these are the 3 or 4 sectors that stand out in terms of benefiting from the new India that we talk about.
Ridham, finally, before I let you go, what could go wrong?
No, lots of things can go wrong. None of these forecasts are secure. There are a lot of uncertainties in the world. We could not have predicted COVID, for example. Who knows what's the next big crisis that's coming to the world? But we've tried to take a shot at that in this report. There are 4 or 5 things that we highlight. I think the first thing to bear in mind is that we have an election cycle coming up in a year and a half. I think that will be critical. It'll be important for the Indian electorate to put in another majority government. Yes, coalition governments do their work, but it always becomes a bit of a struggle, and economic agendas kind of take a back seat. So hopefully we don't get a negative surprise in the 2024 elections. The second thing we need to watch out for is global growth. It does look very tentative. In fact, it's quite possible that India does not have the tailwind that China had when global growth was averaging much higher than it is today. So we will be in a sluggish global growth environment, but we will not be able to tolerate multi-quarter recession, for example. At the end of the day, India exports 20% of its GDP. It's not a small number. And even though we are gaining share, and we didn't touch upon this, but let me just highlight this to you. We think that India's share in global exports will double in the next decade. So we will be able to withstand some slowdown in global growth, but if it's a deep and broad recession, then it will create pain.
Ridham Desai, always a pleasure. Many thanks for joining us here on the record to take us through why you believe that this is going to be India's decade for the taking, risks and caveats aside. But thanks very much. Always a pleasure speaking with you. Appreciate your time. That's it then on this edition of On the Record. From all of us here, goodbye. Many thanks for watching.